Fed set to cut interest rates again. What it means for 2026 visual. Dynamic graphics of the Federal Reserve Building, falling interest rate arrows. Narration. Welcome back to our channel. Today's biggest trending news in the United States, the Federal Reserve is reportedly preparing for another interest rate cut. Yes, you heard it right. After months of economic uncertainty, slowing job growth, and rising market anxiety, the Fed is expected to lower the federal funds rate once again, bringing it down to around 3.50 per cent, 3.75%. But why is the Fed cutting rates again? What does this mean for your money, your loans, and the US economy in 2026? Stay with us. We're breaking it down in 3 simple steps. Right finger part 2. What's happening and why visual. Graphs of employment numbers dropping, economic slowdown indicators. Narration. First, let's understand the situation. The latest economic data shows the US job market is losing steam. Private employers cut over 32,000 jobs in November alone, a sharp reversal from earlier expectations of stable growth. When employment weakens, consumer spending slows. And when spending slows, the overall economy begins to cool. That's exactly what the Federal Reserve is trying to manage. By cutting interest rates, the Fed hopes to make borrowing cheaper, stimulate business investment, encourage consumer spending, prevent a deeper economic slowdown. However, inside the Fed, not everyone agrees. Some officials are concerned inflation is still a threat, meaning aggressive rate cuts could heat up prices again. But the majority sees the slowing labor market as a bigger risk right now. Right finger part 3. What this means for you visual. Mortgage rates dropping, credit card percentages falling, happy consumers. Narration. So how does this affect you? Lower interest rates usually mean cheaper home loans, lower credit card interest, easier financing for cars and businesses, potential boost in the stock market. But there's another side. Savings account returns may drop, and inflation could remain sticky in some sectors. As the US steps into 2026, economists expect cautious recovery, but only if job losses stabilize and consumer confidence returns. Narration, outro. So, what do you think? Will another rate cut help the economy, or is the Fed taking a risky path? Let us know in the comments. Don't forget to like, share, and subscribe for more breaking updates.